Hi, Chris Duff over at Serious Land Capital, vacant land funding partner. So I always like to give you guys, most kind of updated learnings and precisely how we're navigating deals. So whenever there's like a real tangible update and something that might have a couple unique elements or we haven't totally sorted out a deal in a particular way, I like to give you our most updated thinking. In this case, and you should view this as a pretty positive sign, we had purchased a property in Alabama, about 8.5 acres, um, that had really significant development potential. It was basically leftover acreage within an already developed major subdivision and had multiple street access points, sewer lines that were right at all of those kind of points of frontage for the various streets, water lines and power. And so it was just kind of ripe for further development. And we just got, pretty seemingly incredible on paper deal, like 25-ish, 26K of the initial purchase. And we thought, hey, we could probably list this one for north of 100K based on comps and have, we have a pretty superior property here and should have a lot of developer interest, maybe even, just interest for somebody to live on a larger lot, kind of outside of a more significant metro within Alabama. So, we listed this property, and again, everybody knows, economy is not in the best position at the moment here, and already got significant interest within a week of listing, and got a owner financed offer from a developer who's also purchased property through the broker that we're utilizing within a week of listing. And like this offer came in Saturday, April 5th, so right in the midst of just absolute market chaos, at our list price of $125,000. So, right there is like a 5x gross our initial spend on the property. So, pretty encouraging result just to share where we're at there. And so what we always have to consider, again, from a owner financed situation, is that we try to reverse engineer the terms because we always are looking to sell notes once we acquire so we can keep more routine cash turnover within our core business. So, we're usually expecting we can get 80 cents on the dollar for to go through the actual note sale process at table close as well. And so typically we try to orient towards 10.9% interest, no prepayment penalty, max 8-year term, and at least 20 to 30% down payment on the deal. And so we know we have active note buyers at those terms. And so we can just, again, reverse engineer so that any owner finance offer that comes in, we're already pre-qualifying them for possible exit on selling the note. And of course, we're going to confirm before we accept any offer from our potential note buyers, hey, here's the asset, here's the situation, here's the buyer profile and the exact terms of the offer, and make sure they're comfortable with it before we sign anything. Because I really don't want to get stuck with a note, particularly in a situation where we have a very fresh property that's 5x gross. It should have pretty encouraging market then. So if we could potentially get another cash offer if this one didn't work out, great. That's something else to consider. And I know I've remarked on that before, but that's how we would structure it from a note sale perspective, and lining up how to deal with those owner finance offers. And especially in this economy too, with some of the other properties that we're seeing, like owner financing is definitely getting some more attention. So it's always great if you can offer that to potentially exit and cash out of these deals a bit sooner. So that's how we would orient there. But because, again, like this property was going to be more developer or builder friendly, just the way it was oriented, and that's how we're marketing it as well. Like it's just a prime opportunity. And this particular buyer is a local developer who's had success developing in this area before. But he was looking to make this offer contingent on a rezone within 90 days prior to closing. And, some areas can be quicker to fully rezone, others longer. 90 days usually to me is like pretty aggressive timeline. Our broker seemed to indicate that that was reasonable to get that done, but the rezone that the developer wants to do is for higher density housing units, which doesn't really fit that exact area. Most of the area is just SFRs on the surrounding properties. And so he wanted to rezone to allow for either townhomes or possibly even multifamily, which to me would be a little bit riskier. But again, I'm not on the zoning board in that area. With that in mind, and us not being local, we're not, experts within that zoning area. I would try to figure out, okay, is there a way to de-risk this a little bit? So for other properties, similar to how we did that Louisiana deal, if you're not familiar with that, look back on some of those podcasts I've done over the past few months. A much larger purchase in Louisiana, how we de-risked the subdivide process by having the actual decision maker at the parish tacitly sign off on our plan even before we finished closing on the property. And so we could have like virtually a guarantee that our plan was going to move forward and be approved before we even purchased. And so that's what I'm trying to line up with the brokers. Like, do you have any contacts at the city? Does the possible buyer have any contacts to understand, like, from the key decision-making perspective, even like back to the napkin, can they indicate, hey, based on what you're looking at here, yes, this is like very likely it would go through, or maybe it's there's like a lot of issues here. This one might be trickier, or like, is it a coin flip? Like, percentage wise, what are we looking at here, and how long is it going to take to figure out what that situation is? And so, I was chatting with the broker earlier today. We'll probably be able to figure that out later this week within a few days. And pending that, we can feel a lot better about where we're at with the current offer. Or, and probably my preference would be, is that, hey, can we potentially close this out faster and remove that zoning contingency if that buyer is okay leaving it at the current zoning, or just figuring out the zoning on his own after, when he's already taking title, and us being willing to entertain a possible lower offer in light of this, especially when we have so much margin that we're working with. So like I was telling the broker, let the buyer throw out the numbers, of course, and figure out what his appetite is. Okay, first step is figure out what's the current insight from the zoning side. Can we get an understanding of how likely it is to be approved? If it seems a bit trickier, or there's some real hesitation there, what's the likelihood that he would still move forward with an offer and keeping the same zoning and maybe figuring it out on his own, or just building at lower density housing units, and let him throw out a different offer there, and you already have like our approval on our end that you can negotiate down to like 100,000, and we would still have, even if it was owner financing and net of a discount for a note sale, still a very favorable exit here. So that's the way that I just conveyed that. Hopefully we'll have, and plus, like, this broker has dealt with this buyer before. I mean, he bought another similar property, owner financing, and there's been no issues paying off. He's a respected individual locally and so forth. So seems like a very legit operator in the area. But that's kind of how we structured our step-by-step thinking on, okay, what are immediate next steps to figure out whether we should work with this offer or not, and possibly adjust going forward. And all of this was done in a 10-minute call on a Sunday morning here. To me, so what, on the weekends here, and tough economy, like, anytime there's an offer on the table, I don't care what day it is. Like, I'm excited to make money. Like, let's do it. Let's figure out an offer. So, but just to share with you how strategic and streamlined it was based on our experience dispoing hundreds of properties and figuring out the patterns. Okay, what's the way to de-risk this and still get as much money as we can at the point of sale. So hopefully this is helpful. If you have any other suggestions on how you've dealt with situations like this in the past or currently, I would always love to hear them in comments, or even direct texts, emails, whatever. Feedback is always welcome. And if you're looking for funding, seriousland.com. Capital, Land Daily Diligence Facebook group for zero cost review your land deals. Remember, April 17th, we are doing unconference hot seat sessions live with Dave Deniston, myself, and other $1 million land investors, and landpricer.ai for the most simple and accurate way to price land. Subscribe and share. Talk to you next time. Take care. Bye.